We're back this week with a conversation with Gueric Dechavanne. Gueric is the Vice President and part owner of Collateral Verifications. He's also an ISTAT Certified Senior Appraiser. With that, Gueric, it's great to see you.
Great to see you too.
Now, Gueric, you do a lot of work in the appraiser community, particularly with ISTAT and your company as well, Collateral Verifications. Talk a bit about what you do, if you could.
Yeah, of course. I mean, as an ISTAT certified appraiser, my job is to provide valuation services to the global industry. So I deal with airlines, lessors, investors, MROs, really the whole gamut in terms of when somebody has a need for an appraisal on an asset, whether it's an aircraft or an engine. We also, as a company, we do parts, and so kind of cover the whole gamut of different components that may need to be valued. And usually a lot of the demand comes in, whether it's from an auditing standpoint, where somebody needs a document to show to their auditors when they've bought or sold an airplane, or bought or sold an engine, or leased it, and so that's kind of where we come in and provide that. In today's environment, right, then it's more about providing kind of our experience and our knowledge of what we're seeing in the marketplace based on the trades and leases and things like that, to be able to allow those in the industry to make better decisions in terms of where, when to buy, when to sell, and what's out there.
This is great. I mean, especially considering the current crisis that the industry finds it in. I'm getting a lot of questions about, we've talked about airlines, we've talked about traffic. A lot of the other questions coming are, well, what about these assets? What about the lessors? What about the aircraft values themselves? And the first thing I say is, well, look, I'll give you my opinion, but you really should just call Gueric and talk to the expert on it, which is exactly what the reason why I wanted to talk to you. I know you've put together some analysis, and some great analysis at that, on the current crisis and how that may affect aircraft values, in particular as it relates to some of the prior crises that are getting so much attention now. And I guess it's within that context that maybe we could jump right in. I'd love to hear your thoughts on some of these slides that you've prepared.
Yeah, no, absolutely. And I think I'll start with kind of sharing my views as to why I put this together. And in the current environment, there is just so many questions, as you say, being asked, and there's so many unknowns, that I felt that it was important to provide some guidance to the industry at all levels in terms of what I know, what my experience in the past, and what I'm seeing today, what I'm seeing, potentially going forward. And although, there's still so many unanswered questions, and I think that's the frustrating part for the industry right now, is that you can talk to your blue in the face about what's going on, but ultimately, does really anybody know what's going to happen in 3 months, 6 months? I don't think so. I think that's the as I say, the multi-billion-dollar question, right? Is that what's going to happen going forward? And so my goals with putting together kind of a market overview was to give my thoughts as to how I was viewing things, to be able to look for certain indicators in terms of how the market was reacting, or how values could be adjusted. And that way, hopefully somebody looks at this and sees a different view as to what's going on, especially, when you're looking at current environment where there isn't a lot of trades that are going on at this point. And so that's always the first question that's raised is, hey, geez, as an appraiser, you guys are, we're meant to reflect the market, but when there are no trades, what do you reflect, right? And so I think everybody can agree that, the market that we saw in January, February, and maybe early March is no longer here, right? That's not the reality of the world, but where is it today? And so, I try to put certain things together to kind of say, look, here is based on some of the changes that are happening, right? Here is where I see some of those changes impacting, values. And on the lease rate side, it's a little bit challenging because there really aren't any good trades that are going on in terms of, lessors placing airplanes at, different, that are taking them off lease and putting them off somewhere else, right? They're busy doing other things right now. So there isn't a lot of good information there right now. But so in the slides that I've provided, one was, first of all, I wanted to make sure that, everyone understood that even though there is a lot of talk about previous downturns, it doesn't necessarily dictate what's going to happen in this crisis, right? Just because it happened in the past doesn't mean it's going to happen in the future. But it does provide some guidance, right? And that's what that was for, was just to say, hey, look, after the Gulf War, after 9/11, after some of these, major events that took place, right? Here were some of the, the depreciation levels that I saw based on the data that I was collecting. So that way it kind of gives you a starting point of having something that you can maybe model or use to test, or if you're doing stress testing, you can at least have something to go off.
And this is, if I can just interject, this is one of the reasons I was so excited to talk to you, was because you're one of the few who truly understands not only that, look, we don't know what's going to happen. That doesn't mean that it's not valuable to see how people think through the process. And I think that's what's so important about what you were talking about. Yes, we have data, trading data as recent as January or February, but that was 2020 BCV, before coronavirus. That's a completely different era, right? That now no longer exists. And even though we don't know, there are people out there who know how to think about approaching this new situation, and it's from within that context that I look forward to kind of hearing more about your thoughts.
To me, we're still in the, as I call it, it's the calm before the storm, right? Because right now we still don't know the full impact of this crisis, and so that's why, as part of my title for my market overview, was the Great Reset of 2020, right? And that's because I think that's what's happening, right? If we look at previous downturns, I think there were always certain indications before the downturns that things were starting to slow down already. Whereas I think in this downturn, even though, when you regionalize it, there may have been some areas that were starting to soften a little bit. But to me, this was kind of like it wasn't a push over the cliff. It was somebody took the cliff out from under our feet and we fell straight down. And because the industry came to a grinding halt, right, overnight. And that's what is scary in terms of like, what does that mean going forward? And so that's where some of the differences are, right? I mean, you look at, and that's where some of the charts that I have kind of show that, to show, look, with after 9/11, it was somewhat regionalized to the U.S. After the financial crisis, same thing, right? It was kind of U.S. driven, but this is a global impact to the industry, and so it's affecting everybody at the same time. Where again, some of the other stuff is, you look at fuel, which typically drives the replacement of certain airplanes, and so that comment's been made about, where airlines start to look at newer aircraft and retire all the old stuff. Well, in previous downturns that did occur, but fuel was not at record lows, right? We've seen, what was it last week when it got to negative, right? I mean, just because of forward contracts, right? But fuel is at a all-time low. Now, obviously, nobody's flying, so it doesn't really matter at this point. But when they start flying again, as long as fuel stays fairly low, well, that's going to drive which aircraft will airlines continue to operate for the near term, versus if fuel was back up to 80 or even higher.
Silly numbers. Those are silly numbers.
Those are silly numbers, right? Exactly. I mean, the financial crisis, if you look right before that, it was like 140 something, right?
Yeah, I would say 145 or so is where it peaked.
So that plays a role, in how that works out. Obviously interest rates are at extremely low as well, which that plays a role in things to begin with, and interest rates have been quite low, and that I think plays a role with airlines that are trying to reorganize their operations. And for those that are thinking, hey, we can, do we need to file to be able to restructure existing debt or to restructure what we have? But when interest rates are already pretty low in terms of where they're paying their how they're paying their debt or what they're paying on their debt, that's plays another role, because it's kind of like, what are you going to restructure to, right? Maybe a slightly lower, but the airline risk is viewed as higher, right? So it's probably not that much different unless you just want it to be forgiven, which, that's always an option, but I think that your creditors are not going to like that. So that's probably not a good option. So that plays a role in that as well. I think now we're seeing the challenges that we have on the OEM side, and that's something that we haven't seen before. Who could have thought that Boeing would be in the situation they're in today? And now you have, obviously Airbus that's also saying that, hey, look, we're fighting for survival. There's a lot of different things that I think will make this crisis different from previous downturns. And that's what I was trying to, emulate with one of the charts that I have, just to show, hey, look, it's one thing to look at the past, but let's see where we are today and how different it is, which means that it is going to be a different downturn for us. And so we can't necessarily just look back and say, what, values dropped by 50% for this aircraft type, and so that's what's going to happen this time. It could, but it could be worse. It could be better. Who knows, right? And that's the challenge in terms of trying to figure that stuff out.
I'm fascinated by the idea of airline bankruptcies, especially when it comes to what debt they can restructure to. I think that's fascinating. But also the trigger right now. Again, it's in the depths of the crisis. It's easy for OEMs, which like Airbus, who up until this point were considered to be quite strong, to say, well, demand went from 100% to zero. So now what's going to happen? Well, in the depth, that's all you see is the 0%. And so I'm sure a lot of airlines are looking at that as well. But the ability to either exit leases, exit aircraft commitments, both current as well as incoming orders. For an industry, there are some airlines that are clearly over-ordered, especially given the demand where it stands today. Does that play into some of the bankruptcy risk, or should the debt be enough to kind of overcome that?
Yeah, I mean, look, there's certainly risk, especially in the order books that the airlines have, or even obviously the different OEMs. And I think they're probably looking at that, very hard from the OEM side to figure out who should we be worried about, and who do we need to help out in terms of, is deferring deliveries going to help them or not? And they're doing the same thing with the lessors, right? And I think you've seen that in terms of some of the lessors, with coming out with press releases that they've either canceled some orders or they've deferred others. And so I think that's yet another difference, I think, from past downturns, where I think the manufacturers are, I think, much more willing, and probably because they feel that they may not necessarily have a lot of choice behind it, to be able to defer things, knowing that the demand for new airplanes is going to be very low for the near to midterm. And so rather than put airplanes out there that just become whitetails, or have to be, go to one operator and then the next day have to be repossessed and put at another operator at extremely low rates, right? I mean, I think if you're able to work within those guidelines to try to help as many as you can to be able to defer that, I think it's better for the entire industry. I think the consensus right now is definitely that the global capacity coming out of this is going to be much smaller than what it was. Question is how much smaller, which means that as long as used aircraft are available cheap, fuel is relatively low, there isn't going to be that surge of demand for new airplanes. And so it wouldn't surprise me to not necessarily see any large orders or any orders for the next few years, just because the demand just isn't going to be there.
And that's the challenge. As we go back and look at the aircraft that are being prematurely retired, I guess is the right word, versus those that continue to fly. Right now, the older assets are exactly the ones you want to keep flying, right? They're cheap. They're already paid for. They have the higher fuel burn. And if you're going to retire those assets, you run out all the green time you can and then park the assets. On the other hand, they're also the ones that are retired, not because of the traditional reasons of the higher fuel burn, but because they're the only ones you can retire. All the other ones have debt or leases associated with them, and you're obligated to those assets. So there's this difference between the airplanes that are being retired and probably the airplanes that the airlines would like to retire or get out of. And I'm thinking of new commitments coming down the line as top of that list, especially considering that these are aircraft that were committed to when prices were probably pretty near their peaks. Considering maybe, and I'm just going to throw out a guess, say prices dropped 20%. Now you have to start looking and comparing at, well, how many deposits or what percentage of deposits are down against these aircraft if prices have dropped 20% and they have 10% early on down into their deposit structure. Well, for the first time in what I can remember, maybe it makes sense to just cancel the order and then renegotiate when you need it, rather than continue to pay into the payments into the higher price structure. And even that, deal with the escalation that who knows what's going to happen, whether we're going to have, higher inflation. If CPI goes negative, nobody really knows. It's just a big unknown that you're paying further cash into deposits for deferrals that may actually escalate to an even higher price and put you deeper underwater. It's just a dynamic we haven't seen in a long time.
No, absolutely. And that's certainly, I think, every airline is probably doing that analysis to figure out, what do we do? And on the, I think looking at for used aircraft, it is also, it's easy to say, well, if those are paid off, let's continue to operate those. Yeah, they're going to cost us a little more, but I think behind that as well is, I think the airlines are, all of them are in a cash crunch. And so they're looking at, how do we keep the cash we have on hand? And which means that as we have aircraft that are due for heavier maintenance, for engine shop visits, right? Do we want to put the money back into those? And right now the answer is no. And so that will play a role in that as well, to go, as you said, kind of burn some of the green time for the assets that you feel you can continue to operate. Or, the other side to that as well is that you have the airlines that are looking at, look, we have older fleets that we were thinking about retiring anyway. Let's retire those earlier. But let's look to see, rather than, continue to operate them until they're run out, let's see if we can capitalize on maybe some interest in the market, to be able to sell the fleet with the time remaining. And so I think you're starting to see that with certain airlines that are, looking at certain types that are still in demand, because whether there is demand on the freighter side, whether there's demand, on the engine side. And so they're looking at different ways to see, hey, look, if we put an RFP out, can we actually get some money out of these, knowing that, we have newer aircraft that we're obligated to pay, and we have debt on, or whatever it is. Yeah, do we just go and continue to operate these older airplanes because we just own them outright, or knowing that it's going to be more of a challenge to restructure everything else, right? Do we look to raise cash as best we can, and then focus on maybe trying to renegotiate some things with those that we have debt, or those that we have leased, and see if we can use those airplanes, which we're going to need in the long term anyway.
Yeah. And, this raises a question that actually came up in light of the stock issuances that Southwest and United both made. Does the sale of assets currently suggest that they expect prices to drop in the future? Could it signal that they want to get out of those assets now before prices drop? Or are they just getting rid of whatever has value and fits into their current strategy?
Because cash is king right now, I think that the airlines are looking at, whatever's unencumbered and what can we extract from that. And if we feel that we're in a position right now where the market still views us as a viable operation, they'll be willing to pay us a decent amount for our assets, knowing that we'll still be around, right? So whether it's through a sale leaseback opportunity, or knowing that, hey, you know what, where these airlines are actually, they maintain their aircraft fairly well. So what we're buying is not pure junk. And so I think that's where a lot of that is coming from, because right now it's all about, just raising enough cash to be able to make it through however long they're going to need cash for, right? Until the market starts to recover. So they're looking for any and all ways to do that. And you've seen that with all the airlines that have the ability to do so.
I think the challenge for an appraiser right now is, as I've likened this crisis to, say, something that happens in the cockpit, as a former pilot would do. But when an emergency happens and there's a big loud banging sound, the first thing pilots will do is say, don't touch anything. Just wait and figure out what's going on. And then you start to make the movements. The problem is you're in the don't touch anything moment right now. So we don't even know exactly what it is to start guessing what it could be. But the value is in how we would approach that analysis. Maybe some trigger points that we might see along the way that would lead us in one direction or another. In particular, as you start to see some of this trading activity return. Not only that, but as an appraiser, the last thing you can do right now is say, well, values are zero. Nobody wants. I mean, that doesn't help anybody.
No, and that's always the challenge, right? Is the do you sit and wait and say, what, values are just unchanged because nothing's going on? You can't say they're zero, even though there may be some assets that are worth zero because nobody wants them. But it's not until you actually see trend, that's taking place in terms of how values will be. It's hard to just kind of say, well, you know what, I'm just going to slash my values by X amount. But as you say, there are certain, in trying to figure out how the trends are going to happen or where things are going to go, right? I've spent the last month just kind of thinking about what are some of the things that you can try to keep track of or look into to figure out how ultimately what the trends are going to be, right? And so my approach over the last month or so, and that's how I've started to adjust my values, which I will continue to do as things kind of start to come online and you start to see more trades, has been looking at it from as an investor, right? If you're looking at an asset, you're kind of trying to view it from a lease incumbent valuation standpoint, right? Looking at, if you've got an asset that's on lease, right, and you've got certain points when you're doing a lease incumbent valuation, right, it's a PV calculation, right? You've got kind of the discount rate, lease term, the length of the term. You've got the monthly cash flow, which is the lease rate, and then you've got the residual value, right? And out of those, are there any indications out there that they're changing, right? And so that's kind of how I started looking at this stuff to figure out, well, you know what, if certain things, if one shifts, what are the triggers that if this changes one way and everything else stays the same, what happens, right? And so, on the discount rate or obviously the way that the market is viewing risk, right? If you look at, all the money that's been raised, the capital that's been raised by the airlines, interest rates have totally gone up for them based on the fact that the airline risk is viewed as being higher, right? So from that standpoint, I've looked at that to make adjustments to go, look, whereas before, let's say you had somebody like a Delta that was could borrow money at, maybe 2% or that's when or 125 or less than 100 basis points over kind of 10-year T's or now they're all of a sudden now able to do so more at like 225 or 250 or 400 and so to me those are indicators of, okay, well, if you're from a PV standpoint, right, when you start adjusting that, everything else stays the same, right, the value goes down, right, because then all of a sudden your rate of return goes higher. So that to me is an indicator of, okay, well, where will values go based on the fact that all the investors out there that will be looking to invest in these assets, that's the analysis they're doing. So that gave me one point to start kind of looking at to see, okay, well, what adjustments does that make? On the monthly cash flow, right now, that's the hard part, just because, again, there's no real indications as to the kind of declines that we're going to see on the lease rate side. So that I haven't touched very much, just because there isn't a lot of data out there to be able to tell what that's going to look like. Although I think that as more airlines start to provide more information as to how they're going to cut their operating expenses. I think that will be telling in terms of what they're going to probably ask of the lessors. If they come out and they say, hey, look, when we really start to go back into operation, we're going to try very hard to reduce our costs by 30% or 40% or whatever it is. That's going to be across the board, right? It's not just going to be from one side or another. And so I think that could be an indication of what lease rates may need to be reduced by to kind of stay with a certain carrier. But that's, again, not a lot of information is out there on that. On the back end of that, on the residual, especially for used aircraft, you can start getting a sense on the part out side to go, okay, well, if you talk to the part out guys, they're able to show you, how they're changing their bids based on the fact that, they're viewing the assets as risky, and whatever they're bidding on, they're adjusting, their pricing. And so from that standpoint, right, you get a bit more information as to, well, let's say on the airframe side with certain narrow bodies, right? Whereas maybe on the 737-800s, people were bidding up to $4 million before the crisis. Now they're bidding more in the 2 to 2.5 range, right? So that shows you how that can affect the pricing, because if you reduce, your residual value by that much, right, it affects that gives you a percentage. And then same thing on the engines, as you get a bit more information about, hey, look, there's some guys that are looking at, certain engine deals, or they're actually doing some deals, and this is the percentage of decline that they're seeing out there, whether it's on the lease rate or the engine value, right? That plays a role in the residual as well. So those are some of the things that I've been doing just to kind of support any value declines that I'm putting on, in my publication or anything like that, just because, I think kind of saying, hey, look, this is what happened in the past. And so I know that the market is down, so I'm just going to adjust my values because we know it's down. I don't think that gets you very far. I think you need to have some additional justification behind what you're doing.
Well, and that, look, there's a lot of value in the actual experience of somebody who's seen, the industry for years. I'm not calling you old, but I kind of did.
That's right.